Saturday, February 28, 2026. The geopolitical landscape of the Middle East has just shifted irrevocably. Following a total collapse of the Geneva nuclear summits, the United States and Israel have launched Operation Roaring Lion, a coordinated strike targeting Iranian missile infrastructure and the IRGC Navy. As smoke rises over southern Tehran, the global markets are bracing for a Monday morning bloodbath. Bitcoin has plummeted to $63,000, and Brent Crude is eyeing a vertical breakout. If you have money in the ASX, energy, or crypto, the next 48 hours are the most critical of the entire year. We are reverse engineering the economic shockwaves right now. We will track the fallout from the Strait of Hormuz directly to your tax return. This is the financial breakdown you cannot afford to miss. Do not look away. Let's look at the hard numbers driving this panic. Iran currently pumps roughly 3.3 million barrels of crude a day. But Iranian production is not why the global market is melting down right now. The real kill switch for the global economy is the Strait of Hormuz. Currently, 1/5 of the world's daily oil supply, alongside a massive chunk of liquid natural gas, is transiting directly past Iranian coastal batteries. Brent Crude finished Friday at $73, already pricing in a massive geopolitical fear premium. But with combat operations now fully active, analysts at Bloomberg warn that a total maritime blockade could easily push oil to $150 a barrel. Even a partial disruption flips the 2026 global supply glut into a massive deficit overnight. For every $10 oil moves up, global inflation rises by nearly 0.5%. This isn't just a localized military conflict. It's a global inflation bomb waiting to detonate. Central banks will be forced to keep interest rates higher for much longer, crushing household budgets and destroying mortgage affordability. The cost of everything from groceries to shipping is about to skyrocket, and the window to protect your personal portfolio is closing fast. When the Sydney opening bell rings on Monday morning, the ASX 200 will be a tale of two completely different markets. First, we have the war winners. Woodside Energy and Santos are the primary vehicles for Australian investors looking to hedge against this chaos. Woodside recently hit an 18-month high strictly on conflict fears. If crude oil sustains above $80, their free cash flow becomes a tidal wave of revenue. Watch closely for a massive re-rating of these specific energy stocks. But you need to watch the war losers even closer. Qantas is highly sensitive to unexpected jet fuel price spikes. If crude stays vertical, their post-pandemic recovery margins evaporate completely. Additionally, the broader ASX 200 often sees a violent flight to liquidity during these black swan events, where panicked investors sell everything to move into cash or gold. Do not be surprised if your reliable bank and tech stocks take a brutal 2% hit on Monday simply due to macro-level panic, regardless of their actual solid business fundamentals. The iron ore giants like BHP and Rio Tinto might also see turbulence as Chinese supply chains react defensively to the sudden energy crunch. You have to trade the harsh reality of the market. Now, let's talk about the safe havens. Physical gold is doing exactly what it's supposed to do during an international crisis, hitting absolute record highs as institutional investors desperately flee to tangible stability. But Bitcoin, it is absolutely failing the global stress test today. Despite being called digital gold by its loudest supporters, Bitcoin has behaved much more like a high-risk, volatile tech stock today, dropping over 6% in mere hours as heavily leveraged traders were wiped out across the board. If you are looking for immediate, reliable portfolio protection, the historical data from the 2025 conflicts and today's midnight strike show that gold is still undoubtedly king. However, for the aggressive, high-risk, high-reward investor, these intense geopolitical dips in the crypto market have historically been massive, generational buying opportunities. That is, if you can actually stomach the brutal 20% volatility swings without panic selling at the absolute bottom. The choice between physical gold and digital assets has never been more stark, and the market is mercilessly separating the emotional amateur traders from the cold, calculated investors right now. Prepare for a wild ride. Finally, here is a vital, money-saving strategy for your 2026 tax return. We are rapidly approaching the end of the Australian financial year. If this sudden conflict causes a broader, sustained market pullback, it is time to look aggressively at tax loss harvesting. If you are holding underperforming stocks, selling them now to realize a capital loss can directly and legally offset the massive capital gains you might be sitting on from your surging energy or gold holdings. The ATO is heavily cracking down on international reporting this year, so ensure any capital gains from offshore energy ETFs are correctly converted to Australian dollars. Volatility is a severe risk, but it's also a remarkably powerful wealth-building tool if used correctly. The situation in Tehran is incredibly fluid. Immediate military retaliation is expected within the next 48 hours. Hit that subscribe button right now and check the pinned comment below for our live, continuously updated conflict watch list. Stay safe. Keep your stop losses tight, and I will see you in the next market update.